Every wire story explained Tuesday the same way. The 10-year surged to 4.7%.
That surge was Monday's. On Tuesday, the 10-year did not move. 4.72 to 4.71.
The level is high, and it has been high all week. But the level did not change on Tuesday.
And a level that does not change cannot explain what happened underneath it. Optical components lost between 10 and 19% in one session.
Nvidia lost 2.34. The press recycled Monday's cause onto Tuesday's decline, and the real story is in who got sold and who did not.
Quick note, this is education and entertainment, not investment advice. Companies are examples. Never buy or sell calls. Do your own research. S&P 500, 7,691.76, down 69 hundredths. Nasdaq 26,289, down 1.33.
Dow 53,343, down 22 hundredths. Russell 2000, 3,017, down 1.30. VIX 1584, up 4.28.
Energy up 1.76%. Healthcare up 1.6D. Staples up 1.06. Financials up 45 hundredths.
And software down 0.03%. Flat.
Then technology down 2.47. And semiconductors down 4.96.
So the index fell 0.02%, while one part of it fell 5, and another part went up.
Optical and interconnect. Fabrinet down 19.38%. Applied optoelectronics down 15.16. Credo down 13.03. Coherent down 12.75. Lumentum down 9.87.
NeoClouds. CoreWeave down 12.10. Nebius down 7.60.
Memory and storage. Seagate down 9.16. SanDisk down 9.01. Western Digital down 7.43. Micron down 7.02.
Power and electrical. Talen down 11. Bloom down 9.97. GE Vernova down 6.90. Vertiv down 6.80. Eaton down 5.29.
Optical fell 3 to 4 times as hard as semiconductors. The 4.96% in the semi-index was the mild part of this tape.
One thing on the power names. We could not find a same-day catalyst for GE Vernova, Vertiv, or Eaton, and the volume agrees. GE Vernova traded 100% of its 30-session median. Bloom 106.
Normal volume, 7 to 10% lower. That is what no news looks like.
Talen is the exception. 332% of median. Something happened there, even if we could not pin it.
The measurement that changes how we read the day. All of these are against each name's own 30-session median volume.
The market first. The S&P traded 81% of its median. A quiet session.
Fabrinet traded 424%. Talen 332. Meta 171. Coherent 162. CoreWeave 148. Credo 147. Applied Optoelectronics 143. Lumentum 135.
Every one of those is well above normal, on a day when the market itself was below normal. That is real distribution.
And Nvidia traded 82% of its median.
82, the same as the market. Nobody sold Nvidia. It drifted down 2.34% on below-average volume, while the complex around it was taken apart on heavy volume.
Our read. The market did not reprice AI demand. It repriced everything that is being built because of that demand.
And there was no recovery into the close. The absence of one is the tell.
CoreWeave closed at 0.2% of its daily range. It finished at the low.
Coherent at 3.9% of its range. The S&P at 20.5.
A gap down that never recovered, held all session. Closed on the low.
That is distribution. A scare gets bought back in the afternoon. This did not.
The center of it reported Monday after the close. Fabrinet.
Fourth quarter revenue, $1 billion. $315.8 million against about $1,280,000 expected. A beat.
Non-GAAP earnings $4.10 against about $3.81. Also a beat.
Guidance for the next quarter, $1.375 to $1.425 billion. That implies about 43% growth year over year.
Full year revenue, $4.64 billion, up 36%. Data center revenue, $669 million in the quarter, up 68%. and now 51% of the company.
A beat, a raise, 43% forward growth. The stock fell 19.38%.
The reason is the second derivative, not the level.
In the March to June quarter, revenue grew by $162 million. The guidance for the next quarter adds $84 million.
Sequential growth roughly halves, and the stock had run about 25% into the print.
Priced for acceleration. Delivered deceleration.
And there is a second thing, which we would flag even in a good quarter. They removed the datacom and telecom split from their disclosure the same quarter the growth rate halved.
Analysts said on the call they could no longer compare to prior periods.
Free cash flow was minus $37 million on $92 million of capital spending at record revenue, and a $57.4 million Thailand top-up tax under the OECD minimum, which nobody had modeled.
To be fair to management, they were bullish. A hyperscaler direct program ramping, a merchant program in December, high-performance computing ahead of expectations. No customer loss, and no insourcing was disclosed.
This was a multiple event, not a demand disclosure.
There is a structural reason that print landed as hard as it did, and it is 3 days older than the sell-off.
Around August 15th, Nvidia's Spectrum X Ethernet photonics switch entered full production. 4 times fewer lasers, 5 times lower power, 10 times higher mean time between failures, 409.6 terabits per second across 512 ports.
Co-packaged optics puts the optical engine next to the switch silicon. It removes the pluggable transceiver and the DSPs and retimers inside it.
Which is exactly Credo's business. Credo down 13.03% is the most explainable number on the board.
And the manufacturing chain has names. TSMC for the silicon photonics, SPIL for packaging and test, Lumentum for the laser chips, TFC for the laser modules, Foxconn for assembly.
5 vendors. That is a bifurcation, not the end of a category.
The easy version of this story is wrong.
The tape sold this group as Nvidia's supply chain. Most of it is not.
Fabrinet's largest customer is Cisco at 20% of revenue. Nvidia is second at 16%. Nokia and Amazon are 11 each.
Applied Optoelectronics is further away still. Its largest customer is Digicom, a cable distributor at roughly 53% of revenue. Microsoft is about 29%.
More than half of Applied Optoelectronics is cable television.
Credo sells mostly through networking equipment makers, not to hyperscalers directly. And CoreWeave is not a supplier to Nvidia at all. It is a customer.
So what got sold on Tuesday was a label, not a measured dependency on Nvidia revenue.
And one more. Coherent is described as outside the co-packaged optics chain, and for that switch, it is. But in March, Nvidia invested $2 billion into Coherent and $2 billion into Lumentum, with multi-year supply agreements and purchase commitments at both.
Being outside one product's vendor list is not the same as being outside Nvidia's optical strategy.
2 corrections, both ours.
Yesterday, we said the AI build-out has become a large new bidder for the long-duration capital that prices the 30-year treasury.
On Tuesday, the Japanese 10-year hit its highest since 1996, the German 10-year its highest since 2011, and the 30-year gilt its highest since 1998.
American corporate bond supply does not explain a Japanese government bond at a 1996 high. The AI channel is a contributor to a global term premium move, not its cause. We stated that too strongly.
The second one is a data problem. Our database stamps equities at the close, but gold and crude at 4 in the morning.
So when we said yesterday that gold closed at $4,474.20, that was a 4 a.m. print, not a close. On a true closing basis, gold rose about 1% that day, not 2.1.
We are not quoting our own gold or crude prices again until that is fixed.
Which brings the long end into focus properly. Every major long bond is at a multi-decade high at the same time.
The US 30-year around 5.29, highest since 2007. Japan's 10-year near 2.95, highest since 1996. Germany 3.26, highest since 2011. France 4.06, highest since 2008. The 30-year gilt near 5.9, highest since 1998.
And the popular explanation for it is also wrong.
The June Treasury International Capital data. Japan's holdings fell 26.4 billion. China's 25.9. All foreign holdings 72.1 billion.
That is the headline. Now the flows underneath it. Foreign investors bought $6.8 billion of long-term treasuries on net.
They bought $35.6 billion of corporate bonds and $181.4 billion of U.S. equities. Total net inflow, $133.5 billion.
Holdings fell because prices fell, not because foreigners sold. Foreign capital fleeing U.S. debt is not what the June data shows.
Equity was not the only market with an opinion. Credit default swap levels and 3 caveats we want said out loud.
These trade over the counter. The ordering is publicly supportable. The exact levels are proprietary, and we cannot independently verify them.
CoreWeave, around 729 basis points. Oracle, around 204. SpaceX, 161. Meta and Nvidia, around 80. Amazon, Alphabet, and Microsoft lower still.
At a 40% recovery assumption, CoreWeave's level implies roughly a 47% chance of default over 5 years, and Oracle's about 16.
That is model output at an assumed recovery rate. It is not a rating agency estimate, and it is not a claim that CoreWeave has a coin flip chance of failing.
And Goldman puts AI-related debt at about $489 billion so far in 2026, against $322 billion for all of last year.
With the caveat attached, that definition includes leases, private credit, and project finance. It is not $489 billion of new corporate borrowing.
Meta down 4.45%. The 29 state attorneys general child safety trial opened Tuesday in Oakland. Before Judge Yvonne Gonzalez-Rogers, the states seek about $200 billion. Zuckerberg is expected to testify, and it runs 6 to 8 weeks.
A 1.4 trillion figure is circulating. That is a theoretical statutory ceiling, the maximum per violation penalty multiplied out. It is not a claim, not a judgment, and not a liability.
Baidu down 12.73 on second quarter results. Revenue 31.33 billion renminbi against about 32 expected. Online marketing down 19% year-over-year, the 5th straight quarterly decline.
Underneath it, AI cloud infrastructure up 50% and GPU cloud up 283%, accelerating from 184 in the first quarter.
And Alibaba rose 2.76% this same session. That is a rotation inside China Internet, not China risk-off.
Housing starts fell 12.4% to 1.239 million, well under expectations. But permits rose 5% to 1.443 million.
Starts are what builders finished starting. Permits are what they intend to build. Those went in opposite directions, and the report was covered as uniformly bad.
The escalation widened on Tuesday. At least 2 vessels were attacked in the Strait of Hormuz, a fatal strike on a bulk carrier, and a projectile hit on the tanker Minoan Dignity.
Bulk carriers, not only tankers, which is new.
3 transits on Sunday, a 5-day average of 12, against roughly 130 a day before the war.
War risk insurance is reported at up to 1% of hull value per transit, and Cape of Good Hope reroutes are adding about $45 million a week.
The UAE says it detected 2 ballistic missiles fired from Iran's direction and has suspended dealings with Iran. Iran's foreign ministry denies it. There is no independent public verification of who fired.
Ahead, the 20-year Treasury auction Wednesday at 1 p.m. Eastern. The July comparable stopped at 5.63%, a 2026 high.
Then Nvidia and the July PCE inflation report, both on the 26th, and Jackson Hole, the 27th to the 29th, with Warsh's keynote on the 28th.
That's a wrap. If this was useful, follow or subscribe for the next one, and tell us where we're wrong. Thanks for listening.